All right, you ready? I'm gonna run it, and you're gonna get it. All right, watch. Okay, what we're really trying to focus on is looking down on the time frames, on the lower time frames, right? That's really what we want to starting from the lower time frames. Really, what this is called a top-down analysis. It's one way of looking at it. Other people would call it a multiple time. I can't say multiple time frame analysis, but it's essentially looking at the market across varying time frames. My recommendation for you, if you're not trading, whether dummy or live, if you're not trading right now, my recommendation is that you stick to the 1 hour and the 4 hour time frames for now. It's just easier. 1 hour, 4 hour, maybe even the 1 day. But let's break it down like this. Okay. Okay. So we'll probably take half an hour. Have you both got half an hour?
It's good.
Yeah.
We know an impulse is usually followed by a retracement or a correction. Impulse, correction, impulse, right? You know this. I mean, we're going to start with what you know first of all. Okay. And this is mainly, again, this is Dom. This is for answering your question about the multiple time frame analysis, right? Okay, cool. So we know that, and we would look at that, and let's just say, for the sake of the example, that this is a 1 day time frame. 1 day time frame. Okay, cool. Well, the really interesting thing happens when you start to drop down the time frame. Let's say that this is a 1 day time frame here, and this is a 1 day impulse, a 1 day retracement, yeah, expansion, retracement, expansion. Okay. Now the thing is this: if we were to zoom in on this area here, if we were to zoom in on that area here, there's a number of different things that are happening on the lower time frames. Right? So if we were to imagine that we could kind of like go and zoom in like I do this. This is exactly what I do. Imagine we can go and zoom in on this 1 day impulse. All right, on this 1 day impulse. Then essentially what we would be looking at on the 4 hour time frame is a series of expansions and retracements, but just on the lower time frame. So that's the 1 day. And if we were to look at it on the 4 hour, we would see something very similar like this. Expansion, retracement, expansion, retracement, expansion. And that would end there. And then inside this retracement, we'd see something very similar like this. Boom, boom, and boom. Right. So if we pull this away slightly, right? If we pull that away slightly, then what you have is what looks like an impulse on the 1 day, but as soon as you zoom down onto the lower time frames, you've got lots of impulses and retracements as well. And in here, there's lots of buying and selling opportunities on the 4 hour chart. And literally, we just keep going down and down and down. Because if you look in here, if we are to zoom out, and this is exactly what we're doing. If we zoom in on this bit here, if we zoom in on this bit in here, right? Well, it's only the start of the 1 day impulse, just the beginning of it. The 1 day impulse has gone nowhere. Let's change the 4 hour impulse to a different color just for clarity. That's not very clear. All right. So this is the 1 day impulse, which we can't even see anymore. It's gone off the screen. This is the start of the 4 hour impulse. And if we were to look inside here, you can guarantee that we would see the same thing. Exactly the same thing. You would see a series inside the 4 hour impulse of 1 hour impulses and retracements. Yeah? Impulse. It's hard to do now because it's so small that the pixels can't and a retracement. Oh, sorry, look at that, bro. 1, 2, 3, 4. Let's just say that's 5, 1, 2, 3. Right, it's not straight, it's not organized, but that's just because the pixels are too big. And this here would be our 1 hour time frame. Right? And this 1 hour time frame here is literally only the start of a much bigger 1 day impulse, which has just gone off our screen. Right, and if I bring the screen back into normal now, you can see that it looks like nothing. It looks like nothing. But as soon as you zoom in, I think you get this bit already, Dom. We haven't reached the bit where I think you get it. Where's my magnifying glass? Here it is. Oh, flip it out. Like, I'm gonna zoom in manually. Yeah. You can see 1 day, big impulse. 4 hour, lots of little impulses. 1 hour, there's even more detail onto the screen. And if we were, we're not going to, but if we were to keep on going, we could literally drill down into this first impulse on the 1 hour time frame and see the same thing on the 15 minutes. Can't draw it. The pixels won't let me draw it. I'm too zoomed in. And we see the same thing on the 15-minute chart. You get that bit, right, Dom? Is that clear?
Yes.
Okay, all right. So if you get that bit there, tell me where the questions start to arise for you.
So I feel like whatever time frame I pick, whatever it's it's usually the 4 or the 1. So I'll do my analysis on that time frame, and then I know that I'm meant to go down to a lower time frame to try and see the exact same fractal pattern, trying to get a lower entry. I'm just not too sure how to do that. So I know the theory behind it. It's all fractal, the same things happening all over again, but it's just me doing it on a live chart.
Yep.
I feel like I can mark up the first time frame, but it's when I have to go into a lower time frame. And because the time sometimes has moved on so much, I'm like, where am I looking? But I know where I'm looking because I know I'm looking in my area of interest. But this
Okay.
because like here, you've got the expansion, but in that expansion, I've highlighted it, the blue expansion, I've highlighted it. But when I go down to on a lower time frame and I see the red bit, I'm like, where am I looking?
Okay, cool. So the confusion sometimes arises. I don't know if this is happening for you, but the confusion sometimes arises because when we're on the looking at the daily chart and we know that we're trying to find a buy somewhere, then we come to the 4 hour chart and we're in the middle of a retracement, and everything in here is telling us that the market's going down. Everything in here is telling us the market's going down. And so it happens to almost everybody where you know that you should be looking for a long, but all of the signs on the 4 hour chart are going bearish. The 1 hour chart says it should be going bullish. The 15 minutes is going bearish. It's like, which one do you do? So the rule should be like this, right? You should be finding an entry that will take you in the direction of the higher time frame bias, which means you might have to wait. You might have to wait for your trade. So let's look at this one here. This will be quite a good example, right? The 1 day is bullish. The 4 day is bullish. But you come to the marketplace and you're looking, and with time when you come into the market's in this retracement. Lower high, lower low, lower high, lower low, lower high, lower low. But the 4 hours bullish, the 1 day's bullish, the market's making lower highs, lower lows, lower lows. What do I do? Is this close to the kind of a question that you would be thinking? Or have I lost the question?
I suppose it's part of it. I I need to see it live. I think that's what because when I'm doing it, like I understand all this, I get it.
Yeah.
But I think it's just moving it to the actual live
Okay.
candles.
Okay.
Is where it just is like, what am I doing?
Okay, lovely. Let's try that then. Let's try that very quickly. Okay, I'll put that back so it comes up blue again. Okay, cool. Right, live candles. Live candles. Okay. Okay, let's take this as an example. Let's just use this one that's on the screen. I'm going to go to a clean chart. But let's use this one that's on the screen. I said I'm going to go to a clean chart, and this one's got... Look, can you see that even I put my markings on myself? Can you see? So I'm saying to everybody, practice this as a drill. Practice it as a matter of like, this is gonna help me. And I do it myself. I do it myself, right? But let me clear all of this off. No. This is what we want to do. Okay, so Dom, let's answer this question then. What makes me laugh so much is that this is exactly what we're teaching, which I've shown you in the class. And you can look on my screen and see that I'm doing the same thing that I kind of show you in the class. For now, I actually want to leave this on there, so I'm going to leave it. All right, watch. What do you think on this time frame, which is on the daily time frame, Dom? What is the market bias?
It is going bearish.
Okay, market bias is bearish. Cool. Okay. So, if the market bias is bearish, we're definitely looking for sells. We're looking for sell opportunities. We know the market is bearish because we've got our pairs. Yeah. There should all be pairs there. Lower highs, lower lows. They should all be in pairs. All right. And so we know that the market is actually bearish. But sorry, now I'm gonna have to go and turn that off. Sorry, I've got multiple screens open, so okay. So we know that we should be looking for a sell. Somewhere we should be looking for a sell because the market direction is bearish. All right. But what happens in this moment, in this area here? What happens here? I'm really trying to get your question correct. I want to help you and get your question correct. What happens inside here? What are you doing when the market is bearish and is in a retracement? What should you be doing? Here's a really big retracement. What should you be doing during this period of retracements while the market is bearish? All right. Well, absolutely. If we drill down on the time frames, let's look at this one here. Let's look at this, what I've circled, and see if we can see anything on a 4 hour. Or yes, we can clearly see a series of higher low, higher high, higher low, whatever, they're there. High low, higher high, high low, high. We can see them. And so there is trading opportunity here on the 4 hour chart. As long as you know that it can switch at any time because higher time frames dominate and you should be looking somewhere for the actual sell trade. Does that make sense, Dom?
Yeah, that makes sense.
So if you know that you're in a retracement, you're going to be taking your higher highs and your higher lows. Okay, cool. Let's drill down in this same area here, in the same area, and look in this bit here, right? I don't know if this is making sense. I really don't know if I'm answering your question or not, or if I've understood your question correctly. Can you take a sell here? Well, not much to do, but yes, you could take a sell from the lower high to the lower low. Yeah, you could. I really don't know if I'm answering your question, if I understand your question correctly.
I think you are providing information which is helping me, but I think what what it is when I go down onto a lower time frame, there's too much information for me to figure out what I need to do.
Okay.
So like just there with the areas that you highlighted, I could go down into a lower time frame and go to that area, and I'm like, okay, where am I looking? What am I looking for in this area? What am I meant to do? So I know this is the area of interest, but what am I doing with this area of interest on a lower time frame? Like, what am I looking for?
Okay, I'm going to circle that area just again, all right? And then I'm going to drop down onto a really low time frame, like 5 minutes. Yeah. In fact, let me take this information out. Okay, and I'm going to drop down onto the 5 minute time frame and reset it. I want to make sure that I'm inside. All right, so we've just come outside. This is outside. I want to take everything outside, away. Right, so we're inside the circle now. Okay. So Dom, what happens when you just zoom in? Right, what happens if you just make the screen really big? Right, try and make it as big as possible. Try and make the candles as big as possible. You see I'm playing around with it a little bit, but I'm really zooming in. I'm trying to get as much information as I can.
So what am I meant to be looking for now that you've dropped down? Because for me, there's a lot of information there. What am I actually meant to be training my eyes to see?
Okay, let me show you. What we should be training our eyes to see is the exact same thing that we're training our eyes to see on the higher time frames. And let's do it. We're looking at the 5 minute chart. This is low time frame. Yeah, low time frame. And let's do it. Because I've zoomed it in, it doesn't look so bad. It looks a little bit more normal. Did it look a little bit more normal just as bigger because it's bigger? It looks a bit more normal, right? There's still more candles, obviously, but it looks a little bit more normal. Okay, let's do it. This is what we're doing, Dom. All right, we're doing the same thing.
And am I doing this closer to where price is now?
Well, let's follow this one through, and then let's see what happens, right? So pair number one, pair number two. There's a lower low there. Oh, it's meant to drag it. There we go. Okay. Right. Okay. Good. What have we got here? Let's follow it through. Lower high. Lower low. Agreed? Right. You know this already. This is not new to you, is it? That you know this, yeah? Okay.
Yeah.
So lower high. Let's just call this lower here, lower low. We'll have to call it this one, lower low. And then just for the sake of the argument, it does get noisy. Yeah, you can see there's more candles. It gets a little bit more noisy. But for the sake of this argument, what we're going to do is I actually want to keep lower high, lower high. It's not lower low. This is the lower low. Okay, let's do this one. Right, lower high. We'll call this the lower high here because it's a little bit higher than that one. And then we'll finish with this as the lower low. So you see, I even had to think about it a little bit there, Dom. Right? Because it's noisy. All of this bit is noisy. I've got to choose where I put my lower high and the end in lower high and lower low. This low, if you change it to a line graph, you'll see, okay, you can choose this one. If you want to, you could choose this one. It wouldn't make a difference. This is a fine one. It's fine to choose this one if you want. But the lower low is one of these two. The lower high is one of these two. Let's call it this one. All right? Really and truly, let's just leave it like that. And you see, even on these lower time frames, you've got to take, where it's not clear, there's a lot of noise around here, it's not clear, you've got to take a best guess estimate. Yeah, we could go into it and do all of the little details, but I'm going to call this the lower high, and I'm going to call this the lower low. We've done all of that before. And then what are we looking for? Something that I know you know, is we're looking for what?
The break.
Exactly. And you've just done it on a low time frame chart. Go back to candles. You've just done it on a low time frame. There's the break. This is the break of structure right here. Okay. So now, once you see that break of structure, all of this down area, this last down area, I think we've covered this, and if not, we definitely will, and we need to. All of this down area becomes your area of interest. It's the same with what we did with Dell. If you see a engulfing pattern, it's even possible that if we went up onto the higher time frames, all of this might form an engulfing pattern. I don't know. Let's just see. And there it is. That's it. You see that?
All right.
Okay. This is and literally, I didn't know that. I'm just saying, the market just makes sense to me, and that's why when we go back to here, all of that whole area now becomes your area of interest. And if we do it like how we've done it with when we were first learning this, if we mark all of this out as our area of interest like that.
As the area of interest, are you going from wick to wick for the whole movement?
Yeah,
or
we should be going from wick to wick.
Okay.
Yeah, from wick to wick is really ideal.
Because when we were doing the institutional candle, we were going from the open to the wick.
Okay, cool. So let's just do that for now for the example.
But I just want to know I know you're going to say there's no correct way, there's many different ways, but what would you say is the standard way when you're
go from the
whole movement?
Go from the open. It doesn't matter. I love it. I love it so much, right? It doesn't matter, because what you're going to do is you're going to have your entry here at the open, right? That's where we would start. Stay consistent. You'd have your entry here at the open, right where the pink line is, and you'd have your stop loss underneath the wick. Yeah.
Okay, so the same, but just the whole movement.
So the same. All right. And look, if we put a stop loss there, and we put the entry here at the open, this thing is just jokes, man. This thing is so much jokes. And if we call this our area of interest, yeah. And if we go on to the 4-hour chart, I don't know where it's up here. Yeah. Then look, okay, so you haven't quite got the whole engulfing candle. You've got the lower down, which means if we go on the 2-hour chart, we might see 2-hour engulfing. Let's have a look. No, not quite the same, but maybe the 1 hour, I don't know. There you go, 1 hour engulfing pattern. All right. So this is kind of just showing you that we would have put the stop there, we would have put the entry somewhere there. It's almost the same as if you had found this as an engulfing pattern. It's almost the same. But we did it on the 5-minute chart by identifying what? Lower highs, lower low, lower high, low low, lower high, low low, lower high, lower low, break. And then all you're looking for is for the price to come back either to the open, or I'm sure at some point it will or has come back into the area of interest. Let's just see. Does that bit make sense, Dom?
Yeah, it makes sense. I suppose I just need to continue to practice.
All right. So listen, this is the other thing I'm going to say to you. I totally know where you are, and I get the fact that it's like, oh, these lower time frames are just a little bit noisy. I completely get you so much, and I'd be really honest with you and say it wasn't a million years ago when I was figuring it out for myself. Yeah, it wasn't long ago, before COVID. I was just really studying lower time frame, just a bit before, the year before COVID. I was like, I really need to get this lower time frame stuff. I need to get it. So I really understand where you are. But it's exactly the same. I'm going to take these off. I'm going to take these off now. It's exactly the same as what we're doing on the higher time frames. Can you identify your market structure? Higher high, lower high, lower low, 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 break of structure. Yes, 5-minute break of structure. Once you see the break, you're waiting for the price to come back into your area of interest. That is it. That is really it.
So starting on the 4-hour,
yeah,
I'm doing the same thing, high, low, or whatever direction it's going in. So when I see the break, I highlight the last push up or down before the break. And then I'm going into lower time frames to see what do the exact same thing that I just did.
Yes, that sounded correct to me. And let me tell you the reason why. I'm just going to go and clear this off, and hopefully this will really help you and make some more sense. All right, watch. I'm going to clear these off. We've done this already. I think you're clear on that. What we're doing with these. Yeah. There's the break. Okay. Why would I be looking in that area in the first place? This might help. Why would I be looking in this area for something to potentially happen in the first place? Right? Well, look, on the 4-hour time frame, if I can just find what I was looking at here. On the 4-hour time frame, what can we see?
It broke.
A big push down followed by a push up.
Mm-hmm.
All right? I don't know if you've fully covered this in the class. I don't know if we've covered institutional theory. But this here is an institutional play. It's an institutional footprint.
Mm.
Because think about anybody. Let me take this out. You think about anybody who sold here. Right? Anybody who sold here is experiencing what? What's their life like at the moment?
What do you mean?
Well, if you're a seller here, what do you want to happen to the price?
You want it to go down more.
Yeah, you see that, Dom? If you're a seller, if you're in this candle, this black selling candle, the reason why you're selling at this black selling candle, especially if you're selling down here, is because you think the price is going to continue going lower. Right? Okay. So when the price does not continue lower and starts rallying higher, what's the trading experience for these people inside this candle?
Panic.
And drawdown.
Yeah.
Right. That's the life that they're living up here. They are in drawdown. Anybody that's sold here is in big drawdown, particularly the institutions. And what needs to happen for the institutions is that they need to come back into this candle here for the purposes of what we call mitigation, which is to balance the books, to close out these losing trades, right? And they'll close out these sell trades with buy orders. To close a sell, you make an equal and opposite buy. And so we can look at this here. I've even got a template for it. Banks in drawdown. Yeah, and we can just look at that. It's another way of me saying this is an area of interest for me. Yeah, the same thing. The banks are in drawdown on this candle. Same thing, the same area of interest. And then we can start to watch it on the lower time frames. We know, and then look, label it. Banks on in drawdown and label it. This is what I do. 4-hour. So you know what time frame you're referring to. Banks in drawdown 4-hour. So no matter what I do, 15 minutes, one day, when I see banks in drawdown here, oh, it doesn't look like the banks are in drawdown here. Okay, it's because I'm looking at the wrong time frame. I need to be looking at the 4-hour. And then boom, you go look at the 4-hour chart and you can see banks are in drawdown on this candle. All right? Clear so far?
Yeah.
Now, then what I would do at this stage is I would start looking on the 1-hour chart. And I would be looking for a series of lower highs and lower lows, lower highs, lower lows, lower highs, lower lows into this area. Right? That's what I would be doing now. I know that in 4 something should happen around this 4-hour candle. I don't know what. I don't know if it will. Price might continue just to go straight through it, but I want to see what happens in my area of interest. My thing's frozen. Okay, and so all I'm looking for is a series of lower highs and lower lows into this area. Let's mark it up.
So you're waiting for the candles to hit that area?
Yes, absolutely. That's what I'm waiting for. And so drilling down on the lower time frames can only be done, or should only be done if you're looking for a trade entry or if you're looking for something to happen. So there's the high of this move. There's our first lower low. See that? It's broken, the higher low here. So there's our first lower low there. Okay, boom. There's our first lower high, which we only really mark in once we've seen the second lower low, right? And then we just play it out and watch. Let's just watch it. Let's just see. Bang. Let's just watch it happen. Okay, cool. Okay, have we seen a reversal? Yeah, that looks like a... We could put that in there. If we need to change it later on, we can change it. If the market structure changes, no problem. But we've got another lower high and lower low pair. Okay, cool. We've got another one here, but let's not put that in. Let's just wait until it reverses. And now, when it comes down into my area of interest, what am I going to do now, Dom?
You are going to do something. You are going to find your
Look at my arrow.
entry.
Look at my arrow.
I'll go down again.
Yeah, exactly. Because now I want the detail. There's no point being on the lower time frames if you're not looking for detail. And once it comes into my area of interest, now I'm looking for detail. Now I want the information. Okay? And now I can start marking up my lower highs and lower lows on the 15-minute time frame. Let's just put another one in. Lower high, lower low. Right, let's play a few more. Lower high, lower low. Can you see a break of structure yet?
No.
Okay, so have we got any reason to make a buy?
No.
No reason at all. We're just watching. We've got no reason to do anything at the moment because the market is still in free fall. All right, let's play it on. Yeah, okay, so we could potentially call this a lower high and a lower low. Let's see. Maybe we've got to change it. If the market structure means that we change it, we change it. That's interesting. A little break there. See this?
Mm-hmm.
All right.
So now that you've seen that, then you, which, has it just broke?
Yeah, it's just about. Yeah. See that? It's just a little bit higher. You can always test with the line graph. And it's just a bit higher. It's not a nice break. It's not the cleanest break. But it's a break. And so we look at all of this area as our potential down move that we want to get a trade from inside here. And I'd be looking, if I get it, I'd be looking to find a trade with a buy somewhere around 50%. Somewhere around 50% because it's broken. I'm looking for a buy now because there's a break of structure there. See that?
Mm-hmm.
Can you go and look for more detail on the lower time frame? Absolutely you can if you want to, but let's just stick here for now. Okay, so that's me. I'm in the trade. See that?
Yeah, so this is for the a buy limit.
Yeah, exactly. I would have had a buy limit in, or I would have been watching my screen. I'm buying, and I've got my stop loss below here now. Okay, I've got my stop loss below the low.
At a whole number.
No, below a whole number. I don't like to leave them at whole numbers, so I leave them below whole numbers if possible. On a buy. So.
Sorry, what do you mean by that? I thought.
I don't really want to leave my stop loss at 75, or I'll probably leave it below 70, like 69 or 68 or something like that.
Is that what you do just for a buy? Is that, or even for sells?
On sell, I'd leave it on the other side, like I'd leave it above,
yep.
a couple of stops above, yeah. But don't worry about that for now. We could come back to positioning your stops and at another time. That's fine. Just for now, you'd know that I'm in this trade at 50% of this down move. See that?
Yeah.
50% of this down move. Maybe even you could have got a better one at 76% of this move here. There's like 76s right there. So let's just play and see what happens. Okay, boom. One by one by one. Okay, where are we going? Okay, boom, nice. Starts to move in your direction. Okay, clean break. And you found that on the lower time frame. And see that? Now we should really have had a, I think I moved the lower high. This should be, there's one missing. It should be there. All right. Lovely. Another break. So now what happens? This whole area becomes our area to look for another buy. And you just keep on playing the same thing over and over and over and over again. Is that a break of the 1 hour? No, it's not. Just wanted to check. Does it make any sense, Dom? You're only going on the lower time frame when you're looking for details. No point looking around there if you're not looking for detail. You find the trade setup on the lower. You've tried to find the trade setup on the higher time frames, and then once you've found the trade setup on the higher time frame, you go down onto the lower time frame when you want the detail.
Yeah.
This is the real.
It is making sense. It's just, I feel like every time I go to the chart, it just goes out my head.
Okay, watch. You don't need to look on the lower time frames until you get into your area of interest. That's a really important. If I hadn't said it before, that could have probably saved us all a lot of time. You don't need the low time frames until the price is in your area of interest.
So just like there now, it's come back into the area, and then I have to go down to the lower time frames just to find an entry for that.
Yeah, that's right. Because I know that even before the price got there, when I'd taken the price out, like I know that even while we're here and before we've been able to identify all these lower highs and lower lows, before we've been able to put them in, right? They weren't there. I've identified this area as an area of interest. I've called it banks of drawdown.
It's going to try and mitigate, yeah.
Yeah, you could equally call it your area of interest and put it like we've said. It doesn't matter what you call it, right? You've got that because of this candle setup, and so you don't need to do anything about. You don't need to do anything about it. You don't need to go down onto the lower time frame until the price is in your area. Now you've got something to do. All right, okay, well, looking at the 4-hour chart is not going to give me my most precise entry. The price is in my area of interest. I've got to find the precise entry on the lower time frames.
So when you see it go back into the area, that's when you go down and do all the
That's it.
further analysis. But then you've got to move quickly then, because
yes, you've got to move fast. Yes, and then the lower. But the thing is, you've got to move fast. But you already know from your 4-hour time frame, if the price goes in here, I'm looking for my buy setup. All right, you know that already. You know you're looking for a buy if the price comes back in here. So when it's in there and you're on the lower time frames, maybe the 5-minute time frame, you're like, okay, cool. I know what I'm looking for. As soon as I see a break of structure, I'm going to get ready to buy. I mean, it will be literally like this. There's the lower high. There's the lower low. I think it makes another one. Yes, there's the lower high and there's the lower low. See that? Lower high, lower low. You can see it. It's clear. When you zoom in, we're looking at a 5-minute time frame, and this could easily be a hour time frame. It could easily be a 1-hour time frame or 4-hour time frame, right? Lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Okay, cool. Let's go and see what happens when the price breaks this. Wait, we know that it does so. All right, consolidation, nothing happening. What's happening across here? People are getting buy orders. They know this is the mitigation out of the 4-hour candle. Do you get it? All of this buying and selling is the mitigation out of the 4-hour candle. It would clearly be majority buys because we know the price goes up. All right. Now, watch. We're looking for the break here. I'm gonna even put this, and I do this sometimes on my chart. That's a really low break. We're looking for the break here, and then I put a little question mark. I come here, 5-minute break higher. Hasn't happened yet, so I can't put it in for sure. I just put a little question mark there for myself at the right on the edge, top right. Okay, 5-minute break of structure. Is it going to happen? Okay, let's see. Well, we got ourselves a lower low here. Yeah. Yeah, you see that? You got yourself a lower high, a lower high, and a lower low.
Mm-hmm.
So you could, if you, this is when it gets into the real detail, and you'll find the nicest trades like this. You'll find the nicest trades like this. You could even go here.
Yeah.
Lower high, lower low. Right? Now I want to see what happens when it breaks this. To be honest, that's when I would drill down. I'm like, oh, this is looking nice. I'd go down onto here. Bang. There you go. All right? So once you've broken that, this is even better than the one that we did this. We're doing the same thing, but we're doing it with actually a tighter stop. Now all of this down area becomes my area of interest, and I want to get in about 50% if the price goes here. I don't know if it does. I don't think the price comes back, but I want to get back. I want to get my trade somewhere in here. Let's see.
But we've already gone down, Leon. So wouldn't you take a trade on that time frame on the 5 minute?
You could do. You could do, but
if it comes back to...
Yeah, if it comes back in here, I definitely want to. I mean, let's see. Let's just play it out, okay? On this break, once I see the break, I'm like, okay, let me take away this whole area of interest now, which is our 4-hour institutional drawdown candle. On this break, look, I'm taking my box, and you'll see this all over my charts. Boom. I want to find something in there. Right? I want to find something in there. Because this can now go 5-minute break of structure, correct, it's happened. Could take away the question mark. Okay, 5-minute break of structure. Now what do? I'm going down on my 1 minute. So now we're on the 1 minute chart. Doesn't have to look like a 1 minute. Look. Where would I enter here? I'd enter right along here.
So you know this bit here, like when you've just dropped down, I'm like, where am I starting to look? Do you get what I mean? Like, obviously the whole bit's highlighted, but where am I training my eyes to look to start the higher highs? Oh, from here.
Same principle. You want the price to be in your area of interest. Is the price going to be in my area of interest? So you're only going to start looking when the price comes back into here, right? That's when you really want to see. This is why you highlight your area of interest. That's why we highlight it. Because if the price is in my area of interest, I might want to do something.
So you're waiting for that to come back into that area?
Yes.
Okay.
Either to the open of the area up here or to the inside it. And what am I looking for? Specifically, I'm looking right now for a series on the 1 minute chart of exactly what I'd be looking for on the 4-hour or the 1 hour chart. Lower high, lower low, lower high, lower low, lower high, lower low, break. Okay, boom. As soon as I see that on the 1 hour chart, I'm in. On the 1 minute chart, I'm in. I don't know if we see it. Let's see. We should see some type of starts to go. Yeah, it really starts to go. So it's just gone. Let's see if it comes back. Okay, there's the retracement. All right, there's the retracement. This is where I'm starting to get ready. I know I want to buy. I can only buy after a retracement. All right, watch after. So all I'm looking for: high, lower, low, lower, high, lower, low, lower, high, lower, low. Watch.
Hey.
Yeah, watch. Lower, high, lower, low. Watch it.
Oh.
Boom. Did it break? Did it break?
It did, but it didn't go back into the area.
Right, but it's close enough to the open of the area.
Okay.
Open or 50%. Same thing that we've done. So let's see. Is that a break? I'm going to... This is where it gets difficult, right? Because you can take the bite and you get stopped out here. You can take the bite. And if you don't take the bite, then you miss. I'm going to wait. And if I miss, I miss. Okay? I'm going to wait and see if I get another lower low. Okay. I'm glad about that. Yeah?
Yeah.
Because I've got a lower low closer to my area. Okay? And this is good because I either wait until the price breaks up above here, that's the lower high. Price breaks above here, comes back, I buy. Or now what I'm expecting, we're working on a 1 minute time frame, Dom. You'd never know, right? Now when I'm looking at this, what I'm expecting is lower high, lower low, and then I break when it's in here. And then I trade when it's in here. Let's see, maybe I don't get it. If the price breaks above here first, I'm buying on the retracement. If I see a lower low and a lower high, lower low, I'm buying down here. Let's see. Let's see. Okay, what is that?
A break.
A break on the 1 minute chart. Okay, on the 1 minute chart, we've seen a break. Right, it's touched the open, we've seen a break. So what do? I highlight this whole down area. Yes? Highlight this whole down area as the area that I want to trade in. Okay, we've seen the break. And so all you got to do now is when you need to act fast. I'm going to put my entry at the 50% of all of this move. And I do it from the wicks to the wick. Okay, so I'm literally got now, because it's on the 1 minute time frame, I've literally got my finger over the mouse. Right, I'm at the 50%. I go over to my platform like I showed you yesterday, right? And I'm waiting, watching the screen. I can, if I'm not going to be there, I put an order in at 135.89. But if I'm at my desk, I wait. And I either get it or I don't get it. And if you don't get it, you don't get it. Right? If you don't get it, you don't get it, and it's just how it is, right? If you don't get it, you don't get it. I'm still going to hold out for this. We've already had to wait. Oh, it's 9 o'clock at night as well, so not great time of day for this to happen, right? But let's just see. Look at this, Dom.
Hey, it touched and went.
And this is a choice. It's a choice to take it at the open of this area. Yeah, and so what we would end up with, and let's do our profile, our risk profile, is you'd end up with an entry here, a stop loss below the low, and that stop loss literally is a 4 pip stop loss because you're on a
Lower
1 minute time frame.
Yeah.
It's a 4 pip stop loss. Let's just call it 5, whatever. No. Oh, wait a second. Have I got that right? Oh, sorry. Oh, sorry. I did the wrong thing. That's very silly of me. Sorry. No, I was right. It's sorry, I was wrong. It's a 10 pip stop loss. Oh, man. We went from 4 pips to 10 pips. It's a 9 pip stop loss, okay? Oh, whoopity-doo. So, in order for this trade to make sense, we need to have a minimum, I'm saying now, 4 to 1, right? 9 fours, what, 36, yeah? So if I get 36 pips out of this, here's 3 of them. If I can get 36 pips out of this trade, then I've got 4 to 1. All right, let's call that 36 pips.
Yeah.
Is it possible? Is it likely? Let's have a look. Of course it is. Look at all of this to aim at.
Oh, right. Okay. Yeah.
Yeah,
Right.
yeah.
There's the 1 hour chart. We got that imbalance to aim at. On the 4 hour chart, we've got this lovely footprint to aim at. See
Wow.
this?
Yeah.
Yeah. All right. And so we're taking our trade on the 1 minute chart, and we're taking our trade on the 1 minute chart, and we've got ourselves easily a whatever. I mean, where was that? Up here, it was at I don't know what it was. Sorry. 4 to 1, yeah, easily, and it would go more if we wanted it to. All right, so let's just see if we get a deeper entry, and I'd be more than happy to take 2 entries on this one, and then we'll move on to Rachel's thing. So we're back on the 1 minute chart.
Yeah.
Yes, you could take an entry here, and I'd be comfortable doing that for 10 pips. I'd be comfortable adding if it comes down here as well. I'll just play it. Come here, you. Come on, baby. Come to bed. There you go. Did you see that, Dom?
Yeah, went even lower.
Did you see that?
Yeah.
So.
Oh yeah, lovely.
I will be so comfortable taking the trade here, and taking the trade here, with a stop loss below here, and that one gives you an entry of this entry there. It should give you about a 5 or 4 pip stop loss. There you go. There's your 5 pip stop loss. Okay. Where can we take it to on the higher time frame, well, if we take it to here on the higher time frame, oops, so I can't even find it now. We've entered in such a small time frame that it doesn't make sense.
Mm-hmm.
And you take that now with that entry, you go to the imbalance, you've got 8-1, and if you go to the 4-hour
Sure.
footprint that we mentioned before, now you've got yourself a, have I got, not even, yeah, I mean approximately you've got yourself a 10-1.
What are you targeting there for your take profit?
This again, banks in drawdown, institutional footprint.
Ah, right, okay.
Yeah.
Yep.
The same thing that we saw here.
Yep. Yep.
4-hour time frame. Okay.
Yeah.
Same
Yeah.
thing that we saw
Okay.
here.
Yep.
All right. And so now on the low time frame, you're able to get yourself a super tight entry with a 10-1 risks reward because you just understand multiple time frame analysis, baby. It is that sexy. Sexy! Look at the entry. Take a look at magic in front of your eyes.
You need a camera in your room when you see your it going into your area. I'd love to see you at that moment.
I'm like, come on, baby.
Now,
come on.
At this in a demonstration.
Yeah, that's what I'm saying. I'm excited because I just know how the market works. Yeah? Now, look. You've got yourself an entry. Okay? There's no guarantee that just because you got yourself this entry that the trade is going to work. There's no guarantee. And so for me, I just say to myself, I've done everything correctly. I've done everything correctly. If the trade comes and stops me out, what can I do? What can I do? That's the market. That's the game that we play. So at this point, I start to get excited. But you know what? There's no guarantees. So let's play it out and see if this trade wins. We start to feel comfortable when? We start to feel comfortable and pleased with ourselves when we see this make a new higher high. That's when we start to feel good. When we get above here, we start to feel a little bit good because then we know we've got a new higher high. And so up until that point in time, there's no point really celebrating. Yes, it's nice entry, well done. Sniper entry with what? Actually, instead of the 5-pip drawdown, it was less than a 1-pip drawdown. Lovely, lovely entry. But let's see if it actually does anything, right? And there you go. Now you're feeling good because as it starts to go above here, then you raise your stop and you put your stop loss. Yeah. You say, well, I don't need 5 pips of stop anymore. Actually, what I'm going to do, I'm going to bring myself to like 2 pips of stop loss, or maybe I'm even going to bring myself into a little bit of break even. Yeah. Okay. Boom. It comes down, and once it breaks this, you see higher high. Yeah. So higher low, higher high. Right. Then you've got a higher low and higher high. Okay. Once I see this higher high, I'm feeling nice. I'll bring it here. Once I see this higher high, I'm feeling good because now I'm in profit.
Yeah.
Now I'm in clear profit. Right. And you just play it out. Okay, and then bang, you see that? That's why to do that.
You've got money in the bag now, though.
Yeah, I mean, look, and this is the problem with trading. The problem and the difficulty is, this is the game, and this is the real challenge. I want to point this one out here. We got stopped out. You see that?
Yeah.
Stopped out in profit after that lovely, sexy entry. We moved our stop loss correctly. You could have kept it below here and you'd still be in the trade. But we moved our stop loss correctly to protect our capital. And you got stopped out for how many? Four pips of profit. 4 pips of profit. And all of that when your maximum gain on this particular trade would have been 30 pips of profit. If you take it right at the top. So the problem is that the market sometimes does these things. And to be quite honest with you, you heard me mention earlier, I wouldn't have taken this trade because look at the time, it's past midnight. I wouldn't be awake.
Yeah.
I wouldn't have taken that trade. I might have put an order in, but I don't like this setup at this time of the day. It's when we start looking It's when we start looking for this
7 o'clock as
exact
the market
setup
opens.
at the right time. Time and price.
Okay.
This exact setup at the right time. So had I come down in the morning and seen this at 8:25 in the morning, then I might have taken it. I might have taken it. Yeah, I might have taken it with a stop loss below the low. Maybe. I don't know. It's a whole nother discussion. But we would have stopped out for 4 pips in profit when, if we were awake, we could have had a max of 30 pips of profit. And let's just see, just for the sake of the argument, does it go lower? Every possibility comes into this imbalance here. I don't know. But you just play what you see at the time. Right? And that would be the time to do that trade. And I would have, likely I would have taken this trade at this time of the day because it's time and price is right. And then you get your trade. Would not have taken the trade. I said it to you before. We wouldn't have made this trade at this time of the day, but at this time of the day you would have. Yeah. And then bang, money in the bank. Money in the bank, baby. Time and price. Dominique, talk to me.
Yeah, no, thank you. That was that brought a lot of clarity. I think what I was doing was going to the area, knowing that I had to go to the area, and try and figuring things out in the area rather than waiting for it to come back into the area for me to do what I needed to do, if you get what I mean.
Exactly that.
So I think it was, just me trying to figure out what was happening then rather than waiting for it to come back into the area.
So do your analysis on the higher time frames, 4 hour, 1 day, 4 hour, 1 day, and the 1 hour chart is where you do your analysis. And when the price comes, I'm not going to do anything on this chart until the price comes back into here. There's just no need.
Yeah, and that's what I was like before. I wasn't waiting for it to come back. I thought I had to do something there and then when I highlighted my area. I forget what I mean.
No. I mean, if you want to take a sell entry from here, that's what me and Rachel and Rob were talking about on the chat. And it's perfect segue, okay? Perfect segue into the other chart. If you want to take a sell entry into this area of interest, absolutely. But you wouldn't take the sell entry on the 1 day chart or the 4 hour chart. You wouldn't do that.
Yeah.
You'd look at the low time frame. Yeah, you go down on the lowest possible time frame you can. I think we found it. Well, we found it on the 1 hour.
15. Yeah, 1 hour. But I think you could go down to 15 because I've seen.
Well, we found the trade. I mean, let's do.
Sorry,
The trade was on the 1 hour engulfing pattern.
Yeah.
There's that's the trade.
Yeah.
All right. And so what do? You wait for the. I mean, you could equally label this as an area of interest. You wait for it to come in and make what? I mean, really and truly, Rachel, this is the time to make the trade now. I mean, this is setting up for, it could be a really, really nice trade. I'm in already. But this is a break of the 1 hour. But where you would have found your trade, it's a little bit messy because, as you can see, I've been looking at it. Is you would have found it, let's try and see from here, very choppy. It was very, very choppy.
Yeah.
Yeah, you would have found your trade. I mean, the real trade, to be honest with you, the real trade has come today. I think we were in a little bit area just early, just because we saw our area of interest there. But this bit here was this bit here was very choppy. You see that?
Yeah. Yes. Yeah.
When I say choppy, it's just messy. It's just messy. I think I liked this when I saw this break. I like this one. Higher low, higher high, break.
Yeah.
And then you wait for the price to come back in, but then you would have got stopped out. I don't know. I think a little bit of what I was actually in. I remember this pattern forming yesterday, so I was actually in from up here because we had circled it.
Yeah. I was in from there, but I was in from about 2 yesterday, 2:30, 20 to 3, something like that.
So we got in from our area of interest, but I don't know if there was a break of structure there. Let me just quickly take a look as well.
It was kind of choppy, to be honest with you.
It really was. It really was.
It was just really choppy, but we'd identified that area of interest already, and that's why then I didn't then go back and do look at break of structures because I found my area of interest, and then I just looked at the way that I did it, not whether it's right or wrong. Then I just looked at, okay, this is where I want it to come back. Looking at the chart, looking at what had happened previously, I said, okay, this is if it comes back into this area, that's when I'll take the trade. That's how I looked at it.
I think that's a good way to do it. I liked this break. I think I saw this break. When was this? At 3 o'clock. Yeah. So this break again, 1 minute chart. All of this is just so choppy. You got to just be careful with it. So you take the most extreme break, and then when it comes out here, then you're like, okay, good. Now we want to wait for this whole area up here, all of this, and look for something. Look for the price to make its high highs, high lows, high highs, and wait for something to happen inside there. I mean, I don't know how it happened, but it did. It would have happened somehow. There's another break. See, this bit was really, really messy. I didn't enjoy watching this yesterday.
No, because it was because I made a mistake. I made a mistake on the I'm just trading on demo account, and I just went into MetaTrader on my phone, and I pressed market limit, and I just pressed market, whatever it's called, market limit or whatever, and so it put a trade. It wasn't what I wanted to do.
Okay.
I just pressed the wrong thing, and it's like I didn't want to enter there because it was too low, and that trade was in a little bit, a tiny bit of drawdown, but it was kind of, I was just like watching it. I mean, I'm looking at it now; it's kind of all in profit at the moment.
Yeah,
I'm hoping Yeah, because I was trying, like, how do I close it out? How do I close? It was a mistake, and I was like, how do I close the trade? I don't know how to close it, and that's probably my question, really.
Okay, so on MetaTrader, you just need to hold it down, and it will bring you up some options, and then that's when you will say one of them will be close or amend.
Oh, I can see now. So that's you've answered my question now. So, like, if I wanted to modify, because you see, when I press that market limit or whatever it said,
Execution.
Market execution, whatever, that's probably what it said. Oh no, it said sell by market, so I just clicked the sell by market button, thinking it's going to come up with lots of stuff and I can put in my stop loss in that. And it just went in and did sell by market.
And funny enough,
there's not even a stop loss in there.
It's exactly what we spoke about yesterday on the kind of the platform demo. A market trade is what we describe as a Nike trade, which is just do it now, sell by market, or I like to say sell at market. I don't like sell by market, as they say on MetaTrader 4. The real phrase that we would use in the banking industry is sell at the market price. So sell at market is a better phrase. It just means just do it right now.
But I'm glad that I kind of did it, because it was it's on the demo thing, so it's not my real money. But it's like, I'm glad that I've did that now, because I was thinking I'm clicking that and it's going to give me all the things going to come up. I'm going to get the options. I'm going to be able to put in my stop loss and all of that. But it didn't. It just went in and bought at market price. I mean, I'm looking at it now. My stop loss. There's no stop loss in there. There's no take profit in there. There's nothing.
Yeah, that's what the demo account is for. Oh, you going now, baby? Oh, you going now? Yeah. Okay. Are you going right now? Oh man, my baby's going for a sleepover at a friend's house. Are you going right now? Okay, you wait for 2 minutes. Okay, it's no problem. Let me just give my baby a hug, yeah?
Yeah, no, yeah.
All right, hold on. I'm turning the camera off for this. And the sound.
How are you getting on, Rachel?
Yeah. I mean, at times when I'm looking at the charts, to be honest with you, I'm a little bit confused. But I'm able to identify something somewhere. And then when I see when somebody posts in the chat, like Rob posted or something I was looking at, and then when Rob posted, it just confirmed, okay, you're looking at the right thing. Because if I'm just looking at it by myself, I'm thinking, am I doing the right thing? Yeah. So when I hear somebody, okay, this is what I'm doing, then that helps. So it gives that confidence, but I'm not kind of completely confident all on my own.
Yeah, I understand.
Put it that way. So for me, I'm just kind of trying to work it out. So when people post stuff in the chat, especially, if you've been kind of busy and I am looking at the charts. But sometimes I'll look at what other people's trade ideas and think, and if I can see something in the trade idea, then I take it then I investigate it, basically.
Yeah.
And that's what's helping me, rather than kind of and I have found stuff on my own. So it's not like I'm not finding stuff on my own, but when people put stuff in, I'm just investigating further and really taking that further. And that's what's helping me. It's kind of like a piggyback. I'm piggybacking on it and just being able to kind of, the knowledge is helping from that perspective. Yeah. So that's it. And I think it was useful what you're saying today, because I mean, I've been identifying break of structure, but especially like, because we were just looking just now, that was the cable, you know, GBP USD, and the market trend is down. So it's kind of, when you've identified the break, okay, then how do I place? Am I going to look for a buy, or that's what's kind of been a bit, that I found a bit kind of like confusing, you know, where do I go now? Do I make sure it's a buy, or do I go for a sell? Because I know that market is bearish. But what Leon's just showed now, you know, you going for some of the, you know, going for a buy in a bearish market.
Yeah, on the retracement.
Yeah, exactly. Buying on the retracement, and I'm not confident at that yet. That's more dangerous. Confident.
It's dangerous. You know, as long as you know you're going counter trend, you can do it. But there's no need. I mean, just stick with the trend. It's easier, and you're much more likely to.
So that's for me. Like, I'm on British pound, US dollar. I'm looking more for buys than trying to do the sells, because, like I said, I don't understand enough, or I haven't watched enough. I don't have enough experience personally, I feel, to be, and I don't, and also not even necessarily the time, you know, to be watching the market closely. So I'm happier with the sells, because I know, okay, it's more likely to do this.
Yeah.
So I'm more comfortable with that. So
I love it. I you know. So I'm going to stop the recording. I think we've done. Is there anything else you wanted to put on the recording, Rachel? Any other questions?
No, I think what you've not really. I think what you've just shown now, what you showed with Dominique, you know, I'll kind of take a look. But for me, I think even when I'm looking at market structure, I'm going to be looking for the sell. I'm going to be looking for the sell opportunities, because I know with the sell opportunities, especially because it's a bearish market at the moment.
Oh, you mean in cable?
That's what I'm going to target. Yeah.
Yeah. Very, very good. All right, let me pause this. So, you know,